just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. Avinash Gurukshekar of Joindre Capital and Samir Kalra of Target Investing join me on the show. Thank you to both for joining me on the show. Today on Hot Money, we'll discuss the results of SRF and Cipla. We'll ask our guest what's plaguing Kajaria Ceramics, and we'll ask them a view as far as the MNC stocks are concerned. But let's start with the first one, and that is SRF. SRF has managed to recover significantly in trade post the numbers that came out. The conference call yesterday did also indicate positive cues that's coming in, but remember, it's corrected from levels of 2400 right up to levels of 1600, 1700. So the move has actually come in on SRF currently. What's the view on SRF going ahead? We'll ask our guests. So Samir, what did you make of the number and the management commentary?
So I think if you see the numbers were good. Their packaging has really picked up. So whatever the capex was done on the packaging front, that is now helping them operational leverage on that front. In the chemical business, the automotive chemicals are helping them out over there in attaining that kind of a growth. And margin expansion is there in the packaging as well as the chemical side. So that is helping them out. The concern which I have with SRF is all this growth or all this improvement in numbers is being funded through debt. So they have to reduce the debt before they do another capex, but they have already announced another capex, which is around, I think, 60 to 70 million euros. So that another will hit the debt, and that I'm not comfortable with. So I'm staying away from the stock.
Okay, staying away. And Avinash, what did you make of SRF's numbers?
No, I think numbers were pretty good. I think the specialty chemical business definitely did well, and I think the management commentary also sounded quite positive. I think the packaging business, the management has been very clear that there could be some supply driven problems because the demand supply equation is not right. But as Samir rightly said, I think the capex is going to be funded largely by debt, and to a large extent, this incremental interest cost once the unit gets into operations could obviously impact their bottom line, at least initially. But overall, I think pretty good set of numbers in terms of volume, and compared to the fourth quarter when markets expected a better number, this quarter has seen a good top line and a EBITDA growth, and hopefully the management is confident that this run rate they'll maintain.
Okay, we'll open it up for discussion. Avinash, debt is one of the things that Samir spoke about. Are you concerned about that? And secondly, do you think that 40 to 50% growth rate in the second half for the full year for the chemicals business is possible? Because that hasn't contributed significantly as of now.
No, I think that is going to be the key driver, because markets expect that business is going to be a very incremental good margin driver, because that business is definitely more profitable than the polyester film business. Our sense is that instead of 40 to 50%, we could see maybe 25 to 30%, which is a more sustainable number. And clearly in this space, I think considering the kind of number of players, SRF should do well. So second half should definitely do better.
And debt?
Debt, I would believe that, although the debt looks high, I think overall interest outgo is not very large. But then, yes, if the packaging business underperforms, then they could possibly have a dent on their overall profitability because of the incremental debt.
Okay, the next stock we want to talk about is Cipla. Came out with numbers yesterday on closing hours. The management spoke to us. You just heard the management speak about pricing pressure still continuing to remain, but they're quite optimistic on the second half of the year. But what should one do with Cipla numbers and what the management said? We'll ask our guest. Avinash, you go. What did you make of Cipla's numbers? Should someone buy Cipla at these levels?
I think it looks to be a steady performance, although domestic growth was the main driver. Export growth was just about 6-7%. I think clearly the US market is going to be a big driver for them, and hopefully the second half should be definitely better. I think looking at the way the business has panned out, I would believe that Cipla is more of a stable player, and hopefully the US market, where probably they are looking at good product releases, I think the second half should be good. So I would definitely look at buying this, from a slightly medium to longer term horizon.
Okay, buying this for a medium to long term perspective. What about you? Do you like Cipla?
So I'll stay away from Cipla, because what has happened if they have an exposure to South Africa, which has currency issues, and they're going to launch a biosimilar in the second quarter. So I think I'll rather wait for it. The Indian is having a good growth throughout the pharma sector. It's not standalone Cipla which is happening. The US, they have reduced the SKUs. So over there's a $5 million impact over there and it's stable. But if the management still feels there's a pressure in their kind of a product portfolio, I will stay away.
Okay, that's the view that's coming in on Cipla. We'll move on to the next stock, and that is Kajaria Ceramics. Hasn't done well. The numbers were not the best. The management commentary did indicate that they see Q1 as being the last of the bad quarters for them. They see growth coming in ahead. But what should one do with Kajaria Ceramics? What's plaguing the stock? Samir, what's plaguing Kajaria Ceramics?
So there are two ends. One is the raw material costs have gone up for them quarter on quarter, and the revenues have come down. So the volume growth has taken a hit somewhere. Second, and the pricing has come down because of the GST rates also rationalization. The third is the gas prices. So that power and fuel costs have really gone up for them on basis. Now it's around 16 to 17% of the sales. Earlier it was 12 to 11%. So that is hurting. Till the time that settles down, I don't think so the system is out of the worry now. And I think I'll give a quarter or two before I judge on whether the system have corrected or not.
And this applies to all tile companies?
Yeah, this is because the raw material and the gas issues are always throughout there.
Okay, so that's the view. Stay away at this point of time before see the numbers before any kind of action is taken. And Avinash, what's gone wrong for Kajaria? At one time it was trading at new record highs, but the counter has corrected drastically from where it was.
No, I think basically input cost issues and slower top line growth, both in terms of volume and value increases, I think has been the key reasons. Their realizations also were not pretty good. Our sense is that at least the third quarter could be more of a pickup quarter, and we could see some recovery in the fourth quarter. But the second quarter is also likely to be a weak quarter. So till then, as Samir pointed out, I would also believe to wait and watch. We could see a little bit of consolidation and possibly some improvement only by the end of the third quarter.
Okay, and this will apply to all companies, ceramics.
It should, because I think gas prices and input prices are common, and I think post GST now the rates have come off. So you could see a little bit of improvement from the third quarter, but initially the GST rate was high. So probably the second quarter also is going to be a little soft for the ceramic tile companies. Probably the third and fourth quarter could be a pickup quarter.
So you would recommend an avoid on Kajaria?
Yeah, I think we are neutral and we are not negative, but neutral, and as of now we wouldn't be recommending fresh.
Okay, and the last stock that we want to speak about is the MNC stock. So of late, a lot of MNCs, especially in the pharma space, the counters like a Merck or a Pfizer or an AstraZeneca, they have moved significantly. There are other companies like Siemens which came out with good set of numbers, but also lots of listed MNCs in India. We're asking our guest to pick an MNC which they believe that could drive growth or could be a part of your portfolio. So that's what we're asking. So Avinash, I'll start with you. Which is the MNC stock you like and why?
No, I think within the paint sector, we like AkzoNobel. I think clearly in terms of the distribution track record and in terms of the overall performance, it's been a steady performer. I think the company recently concluded a buyback at around 2100 rupees. And if you see the overall capital structure of the business, a zero debt business, a very well managed operating structure. I think recently they sold off their specialty chemical business. So the company will now focus purely on the paint business. They have a decent market share, about 8 to 10%. Some prominent brands include Dulux. I would believe that, if one were to look at the next, say, 2 years, I think paint is one sector which could benefit significantly from the GST regime, and clearly unorganized is still about 25-30 odd %. So looking at the kind of operating ratios and the kind of improvement in the operating profitability, I think around 1700 is not a bad price to get in if one were to look at the next, say, 12 to 18 odd months. Okay,
and what about valuations and financials?
In fact, last year they posted a top line of close to 2800 crores and a bottom line of 203 crores. And this quarter, the first quarter, despite the fact that the demerger has happened since April, top line has been flattish, but margins have been maintained at around 10 odd %. And our sense is that last year we could see an earnings of around 45 to 46 rupees. We could reasonably expect earnings of around 54 to 55, and thereafter about 62 to 63 rupees. I mean, this company always used to enjoy, currently enjoys a multiple of around 35 to around 39 times. So our sense is, this is not going to be a cheap stock. Clearly in terms of the bonus, dividends. So clearly valuations are not very expensive. At the same time, they're not cheap.
It's cheaper compared to Asian Paints, and
it is. But maybe this stock is not that liquid like Asian Paints, but definitely it could be a wealth compounder if one takes the next, say, 2 years.
Okay, so AkzoNobel is something that as a compounding story. Avinash likes, and which stock do you like?
So we'll recommend Wapco India. They are into braking systems for commercial vehicles. They already have around 80% market share for the air braking systems, which are the conventional ones. So the notification came for anti-lock braking systems. Now there are two players. One is a listed Wapco and there's another German company. So Wapco already has 65% of market share in that segment already, and they're doing really well on the production and the revenue side over there. So they do around 16-17% ROEs, and the sales and the profit growth have been around 15-20% consistent in past 5 to 6 years. So I think the liquidity is the issue in the stock. That's why the valuations is around 40 times. It has always past 5 years traded around 60 to 65. So I think over there that is the value creation for a long term. They have no debt and around 360 crore cash right now in the books. So I think this is one stock where we already invested at 1500 levels, but I think that's a continuous upside.
Okay, and how are they financially? How are they performing?
Right now they have around a 700 crores kind of a revenue. Now what they do is that capacity has recently come into place, so that expands by 30 to 40%. So I think over there they are doing a profit of 150 crores. So over there that helps them out.
Okay, so these are the stocks that's been spoken about. AkzoNobel is something that Avinash likes. Samir likes Wapco. Also remember, Samir has been over the past few times, he's spoken about another MNC stock which he likes, and that is JTEKT India, which was earlier called Sunakoyo. That stock is at a fresh 52-week high in today's trade. So it's up 2%. So Auto Ank is something that Samir likes at this point of time. But with that, we're completely timed out on Hot Money. Avinash, thank you so much for coming in on this truncated show actually. Yeah. Samir, thank you so much for adjusting with us today. We're completely timed out on Hot Money today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.